Hey guys, what's going on? November 18th, 2019, Monday. Ton of stuff is actually taking place, even though the market appears like it's not doing a whole lot, besides setting another high, pre-market, all-time high. Market's hitting 20, market is hitting 31.27. Now, what we observe is actually taking place is that the market could collapse from here at any given moment. We're noticing biggest divergence in the history of the markets continuing to develop. Now, it does not guarantee the market will crash today, but this big crash is definitely in the making. So we're going to take a few steps towards a closer look, and we're going to make a much bigger video showing you all the details at some point this week. Now, market is in denial of the reality. This is clear. The best outcome of a trade deal is the fact that things will go back to how they were in 2017. Right now, phase one deal is focusing on just getting this agricultural deal done. Well, before Trump initiated all these crazy tariff wars, trade wars with China, China was buying about 20 billion worth of agricultural product. Well, right now, the negotiation is in process, which China is trying to negotiate down some prices on certain things. But the bottom line is the very best outcome of these phase one deal is nothing changes and China goes back to purchasing roughly what it was purchasing before. So all these couple of years of crazy market swings and Trump trying to get some stuff done leads to pretty much nothing. But supposedly it's supposed to be celebrated as the biggest deal of all deals in the humanity. Basically, bunch of bullshit. Nothing real is here besides a bunch of fluff trying to score ahead of the elections. Now, VIX versus S&P divergence continues to develop. This is becoming a trend. This should not be happening as the markets are hitting all-time highs again and again and again. VIX should not be going higher when the market continues to go higher. So this is becoming actually a huge concern. We've noticed it over the last couple of months, and this is continuing to be now of a trend rather than something abnormal. On top of everything, some of the biggest divergences are developing everywhere. The most important one so far, we're going to take a closer look, is auto sales and credit numbers. At 5 p.m. today, something that can actually bring the market to its knees and break it below 3,000 level all the way down to maybe 3,020 is 5 p.m. Federal Reserve President Cleveland Loretta Master speech. Okay, with that said, we are looking to buy at the market open. Despite the market moving higher so far pre-market, we're looking to buy Amazon puts. See, stuff like that should not be happening, guys. The markets are hitting all-time high. Amazon is way off its all-time high of $2,054. It continued to drop while the rest of the market was moving higher on Friday. This is another divergency. We're seeing too many divergences developing everywhere. Another divergence is NVIDIA. So I was watching it closely so far pre-market. The stock is not moving. It's about 204, 205 level. And typically the characteristic of NVIDIA, yes, it could drop initially after reporting earnings, but typically on the following day it bounces and moves higher. But there's no signs of that. It's trading on inadequately low volume, which does not produce substantial breakouts higher. As a matter of fact, we're noticing that all the stocks are trading at phenomenally lower volumes, which does not produce breakouts higher. Low volumes sometimes can keep the market grinding higher, but these type of volumes that we're noticing today pre-market, they lead to nothing but awesome reversal opportunities. And the reason I say awesome is because put options are substantially underpriced right now in relation to where they would historically be on stocks like Amazon, Nvidia, AVGO, Google. Another interesting play we're considering is CRMT, which is CarMart, and it deals with auto sales and auto credit. We think this stock will actually be a great opportunity to short tomorrow on the bounce. A little bit more on this trade shortly. And clearly, we do want to start buying SPY or S&P futures on the put side as soon as the market opens and looking to add more towards the close of the day ahead of this Loretta Mester speech. Now, this lady is highly hawkish on interest rates. This speech today could actually shake up the market. So a lot of people are going to be paying close attention to that. And so we will as well in order to figure out how crazy can things get out of control after that speech. Now, breakout about 3111 did take place Friday. It was a low probability move, but sometimes these overshoots will take place. So far pre-market at the time I'm recording this, we're 3124. Now, that could change at any moment. Earlier, about an hour ago, we did hit a 3127. So the ultimate levels to keep paying attention to is about 10 days ago, we pointed out a level of 3131, and we actually shifted the target lower. But we're just within a few points of reaching that level 3131. And the next level, of course, to now break on the way lower, because we don't believe that this move higher is going to be sustainable. We believe that the reversal will follow today during the market hours or after hours after the market closes. So, and we're heading back to initially 3074. That was the level that we were calculating Friday morning that we were going to revisit over the next 72 hours. So we're still on track to actually hit this level right here. With that said, things could change rather rapidly at any moment despite the bullish momentum right now. Stocks are suspiciously up so far pre-market on the smallest volume that we have seen in pre-market activity in the last few weeks, even months. So combine that with the divergence between the S&P and VIX. See, market gaps up today. Typically when market gaps up higher, well, VIX is supposed to gap lower, but instead they're both gapping up higher. You got VIX gapping up higher, you got S&P 500 gapping up higher. So you got market up and VIX up again pre-market today on November 18th, 2019. Guys, that is not a characteristic of a further breakout or substantial breakout, continued breakout in the markets. Amazon is what we're considering, especially given the weakness that the share showed in relation to the market. This is definitely a divergence. Typically, Amazon moves alongside the market. So if S&P 500 moves up a point, Amazon typically will move 1.5, 1.7%. That typical correlation has been broken. So we're expecting Amazon to continue lower over the course of the next few weeks to possibly visit that level of 1650, maybe even 1620. The importance of that is this historical correlation between Amazon and the market, and the seasonality is broken. Typically, we see Amazon shares every year go higher in the expectation of the Black Friday sale during Thanksgiving, but nobody's interested in buying the shares this year. So this is different. There's definitely something different going on here that is worthwhile paying attention to. NVIDIA and AVGO puts. If NVIDIA fails to rally today, which we think is going to be the case, AVGO can tank anywhere from $7 to $12 lower. So for those of you keeping this AVGO position, guys, it could be a great position. Just stay with the trade. It's about to produce some substantial returns. Apple, Google puts. You're going to be saying, well, you know, Leonardo, we were waiting for this 265 drop from that level in Apple. Guys, sometimes, you know, you could be off, but just like a day or two. The reversal in Apple is coming. And the reason I put Apple and Google together on the put side is because Google also has been setting all-time highs. Now, notably, Google activity, despite of it being bullish on Friday, especially when you compare Amazon and Google, they were going exactly the opposite directions on Friday. But Google could easily reverse, just like we expected Apple to reverse at some point today, tomorrow. They're both hitting all-time highs, but on lower volumes, and that does not equate to a continued move higher in either stock. So expect definitely at least a temporary pullback. Now, this earnings week is looking interesting. We got some really cool trades that are coming up. TDG tomorrow. We got NTS, could be a huge winner on Wednesday afternoon. We will be trading that NTS trade on Thursday morning, so make sure you're ready to rock and roll. This could produce some stellar returns. Splunk, Intuit, you got some really cool stuff going on. Also, keep an eye on the Tesla event this Thursday. Expecting Tesla to run up all the way through Thursday the 21st and then reverse and fall sharply. So Thursday is looking like the biggest trading day of the week. So manage your capital, trade small for now, but do get ready to trade with some bigger volume and insane focus on Thursday. Here's the slide that tells us exactly what's going on with this divergence in the market overall. I think it's a great representation of the separation between the reality and what the stock market is doing right now. So here's auto sales, okay, for the last 30 years, and they're clearly making a triple top formation, as you can see on this chart. Now, despite this huge move lower recently, okay, in the last couple of years, okay, we actually have a total divergence that is taking place between the auto sales numbers and the stocks. To give you a couple of ideas, here's a chart of CarMax. Clearly, the stock doubled this year, pretty much doubled from the low 50s all the way to almost $100. You've got stocks like LAD, which is Lithium Motors, which owns a ton of car dealerships around here in the United States. The stock also pretty much doubled within the course of the last year, from the 70s, 80s, all the way to 160s. Okay, so the question is, if we are, even given the historical comparison chart that I've just shown you, if we're making less sales, then why are all these stocks trading at all-time highs? Now, here's something interesting that we've noticed has been very consistent with CarMart, America's CarMart. Now, this is not your typical dealership. They do a lot of in-house financing. I'm looking at posting a separate video giving you all the details on this one. For the sake of trading the stock, we're looking for a highly repetitive pattern, which has been making. It's been given mixed numbers, often beaten on earnings per share, but failing to meet the sales numbers, and the stock has been popping and creating a black candle. This has actually happened very consistently. You see that level of 95, 96. This is a key level where the stock has a very difficult time breaking out of. We think after tonight's earning report, the stock will be announcing earnings after market close today on November 18th. The stock is going to pop. Get ready to short this thing, especially if it's trading right around these levels, because there's a high probability of a reversal. Okay, so this could be a hugely lucrative trade. The only thing is, just know this one doesn't trade in the weekly options. It only trades monthly options. So a little bit of patience could be required here, but as you can see, the last couple of moves produced results pretty much almost instantly, even the next day, the following day, or just over the course of about 72 hours. Look how consecutive this reversal was recently, where the stock has reached that level of 95, 96 and dropped 1, 2, 3, 4, 5 days pretty much in a row of moves lower. Now, some really cool trades coming up this week, guys. As far as the market moves, we're expecting a huge reversal to take place today or tomorrow. So November 18th, Friday, was a move 7. So we actually had a opportunity where the market could have easily created a move 11 formation. It looked like it was going for it, but institutions came in and bought the dip and moved the market substantially higher and finished higher for the day. So basically, we opened higher. We're going for the move 11, but then reversed out of it and finished in a move 7 formation. Two-day sequence is 4-7, both bullish moves. The difference, again, for those of you that are new, move 4 creates with a gap down. In other words, when you look in the morning, the market is actually lower in trading pre-market. When the market opens, it opens in the red. Then they buy the dip and they keep pushing the market to where it finishes pretty much positive or just slightly positive in the green. Then the next day we gap up, and here's your move 7, where the behavior of institutions is the same. They are buying the dips in expectation of hopes. Now, oftentimes, these hopes, when they fail, the market creates this awesomely profitable bearish reversal type moves. And I think we're going to get one today or tomorrow. The 5-day sequence is 4-11, 4-4-7, and this is how it looks on the chart. Despite of all these bullish flags, recently over the course of the last couple of months, we have noticed that any time on a 5-day chart where we get more than 2 bull flags in a row, it actually results in a pullback. So in this case, we got 4 bull flags in a row considering the pre-market action. This puts us on a very high probability of a reversal and a pullback for today. Next market move that would be for today, November 18th, would be a move 11, 2, or 6. Notice none of them are green moves. They're all red moves. Basically showing you that at some point today, there is going to be profit taken. Institutions will be getting out of their positions. A VIX review. VIX officially is hitting 11.9 handle very close to the day on Friday. Despite of that bearish activity in the VIX, we think it just hit a bottom and we're positioning ourselves to actually profit on VIX calls. We are expecting VIX to possibly even hit 15 this week, especially after the Federal Reserve, and we do think market is going to come to some kind of reality as far as the trade deal concerned, and understand that nothing is actually taking place here, and I think people are going to start taking some chips off the table here, which could propel the market if everybody does that at the same time in the key names that have been moving the market further. If everybody does it at the same time over the next 72 hours, VIX can easily hit 15. So the strategy, to sum it all up, we are continuing to buy puts while the market is moving higher. We're buying this week and next week expiration. We are shorting the open this morning. Wait until 2 p.m., 2:15 p.m. to actually add more put positions, guys. With that said, trade smart, manage your positions, make it an awesome day. Get ready to trade some really cool earnings. Preserve your capital for Thursday. It's going to be an awesome day. Best day of the week is going to be Thursday and Friday. Let's rock. I'll catch you guys on the next trade soon.